Hello, everyone. Agostino here, and I welcome you to this webinar today on single family versus multifamily real estate investing. Now, I've been investing in both single family and multifamily for many years now. It's going on about 20 years at this point. And started in single family, started doing then small multifamily, and eventually started doing big monster multifamily deals, right? So aside from doing that, I also do development. We do ground up and adaptive reuse. We have a net lease business as well. And we also help people get into the real estate game too, right? Through our bulletproof cash flow, education business, and our media business as well. So one of the things though that I learned at the very beginning is that there are certain advantages when it comes to buying single family, buying multifamily, and really understanding what the differences are, okay? They can both be great investments if you know what you're doing. It's what it comes down to, right? But I will say that multifamily does offer some real big benefits because of the scalability of it, right? But in any case, one of these two, or maybe even both, depending on what it is that you're looking for, right? Depends on the fit, depends on your goals, your experience level, and your access to capital as well. So we're going to talk about all these things today, right? What is a better fit for you? What's a good way to get started? What's the type of scenario that you're looking to build in your life? Okay, what do you have a vision in your life for? And which one of these asset classes is a good place to start if you've never done it, especially if you haven't done it before? So by the end of this training, you'll know the key differences between single family, multifamily, and the unique benefits and challenges that you're going to have with each one, and maybe figure out which path is right for you, right? So ultimately, my goal is to equip you with the knowledge so you can make an informed decision, and most importantly, avoid the costly mistakes. And listen, I've made my share of mistakes in this business, okay? Not too many guys out there will even admit it, but mistakes are made by humans, and we're human, right? So it's like to say that you never made a mistake ever before in your life would not be, how should I say, authentic, right? But that's why through our coaching and our mastermind, we have a 50-week mastermind, I share those experiences with you, and I'm on those calls, and I'm doing I'm right there with you, showing you how I did it and what we're doing and how to properly structure deals so you don't have to walk into the same mistakes that I did, okay? So if you're interested in doing that, by the way, if you go to themultifamilyadvantage.com, go ahead, check it out, set a time with the team, and we'll reach out to you, and we'll get you started. We'll get you into the game, right? So, but first, how about this? Right now, let's start by looking at some of the biggest benefits of multifamily real estate investing, okay? So first, multifamily allows you to scale your renter portfolio much faster than with single family. So if you start with a small multifamily deal, you can add 10 units at a time fairly quickly, right? Versus buying like one single family, 2 single family, 3 single family, and so on, right? You can do it in one transaction versus 10 individual transactions in the case of, like, say, a 10 unit, right? So this accelerated growth is a huge advantage to building your goal, the goal that you have in mind, to not only building net worth, but also cash flow, okay? Secondly, with multifamily, you can achieve better economies of scale. What do I mean by that? Maintenance, amenities, vacancy risk, all these things, if you across, say, a larger portfolio, if you say you had a 50-unit portfolio of single families versus a 50-unit apartment complex, you're spreading the risk across 50 single families. That's 50 roofs to manage, 50 maintenance calls to deal with, 50 sewage lines, as opposed to one 50-unit deal. Typically, you might have one garage, one sewage line. It's easier to manage, right? You have possibly one maintenance guy and everything's in one spot. You're able to spread the cost across one asset as opposed to across 50 individual assets. Smaller assets, but you still have to do that, right? And third, commercial lending terms are typically a little more favorable for bigger multifamily versus small single-family rentals. So you're going to get typically lower rates, which is important these days. You might get some better leverage on it, right? Which is the amount of money available for the loan to value or loan to cost. You might hear those terms, right? And you might also get a better amortization, the length of time you have to pay the loan down, right? So the longer you have to pay it down, the lower the payment's going to be. So if you have a low payment, you pull in some big cash flow, you're keeping the stuff in the middle, that's your margin, you're taking that home. That's your cash flow, right? So you're going to get better terms for a larger deal versus buying a bunch of smaller deals too. So financing is typically a little bit easier on multifamily, and the bigger the deal, the easier it is. You know, when I was first starting out, people told me that. I didn't really believe it. I couldn't understand why. Well, the reason why, I'll tell you the reason. No one could tell me, and I'm going to tell you right now the reason, okay? The reason why is because on these larger deals, there's a lot of people keeping an eye on it. A lot of people want to see it successful, right? If you're talking about a single family home, no one cares about your single family home. They just don't, right? You have to care about it. On a big deal, on a $30 million deal, for instance, right? A lot of people watching it, the lender is watching it, you're watching it, your property management company is watching it, your asset manager is watching it, a lot of people watching that deal to make sure it's successful, right? More eyes on it. There's more eyes on it. And when there's more eyes on it, there's a higher likelihood of success, okay? Fourth thing, multifamily offers a lot of advantages, especially when it comes to value add type deals. And you also get that forced appreciation as well, okay? When you have more control over an asset, okay, you can increase the rents one time across the whole board, right? And you can bang it all out at once and it increases the overall value. You can also decrease expenses too. Again, for the same way we talked about that scale earlier, decrease expenses across the board too. It's easier to raise occupancy. All these different things have an impact on the asset itself and also improves its overall valuation. With single family homes, you're more dependent on the market appreciation. Okay, you're dependent on what happens in that local market that's going to drive the overall value of that individual asset. Okay, so it's not so much dependent on how much rent is coming in on a single family home, but it's more dependent on what the other houses in the neighborhood traded for, what they sold for, as opposed to a multifamily deal where it's treated just like a business. And a business is valued on how much revenue it generates. So two very, very, very different ways of underwriting a deal. Okay, two different ways. Doesn't make it bad or good, but when you have a commercial asset, a business, and you're able to change the terms of that business to improve the value of it, to improve the NOI, the net operating income, you're now improving the value and you can sell it for more money down the road. Okay, so that's what it is. That's what it comes down to. That's why multifamily is a great way to get into and create and generate wealth, right? By improving the asset and also cash flow too. So the next question becomes, what type of multifamily investor are you? So now we looked at some of the benefits of multifamily. So it's important to determine what type of investor you are and see what's right for you. So there's three key types of investors. Okay, so the first is the hands-off investor. Okay, so this type of investor wants low maintenance, passive income. They want a professional property manager, no involvement or very little involvement in the day-to-day operations. Okay, so multifamily investing can work fine for that individual, but you have to have the right team in place to really do the heavy lift and keep an eye on things, okay? You have the hands-on investor. Now, this investor doesn't mind being actively involved. They don't mind overseeing the contractors, talking to the tenants, dealing with all that relationships with those individuals, and which is always a bad thing. If you develop a good, strong relationship with a tenant, they're likely to stick around longer. Some people like doing that kind of stuff, okay? But they have the time and the desire to self-manage smaller properties for maximum control. And typically when you're able to do that, you do a good job of it, you'll maximize your returns as well, right? And then number 3, you have the hybrid investor. Now this investor prefers a mix of being hands-on with maybe some tasks, delegating some of the other aspects of the business itself, right? So maybe they'll self-manage the first few small multifamily properties before hiring on a property manager as their portfolio grows. And typically for a lot of syndicators out there, that's usually how they start. Okay, so now as you're evaluating single family versus multifamily investing, think about which type of these 3 fits you best. Okay, what type of asset do you want to buy? What type of multifamily property do you want to buy? What type makes the most amount of sense for your investment style and your experience? Maybe you're one of those folks that you just don't want to talk to people. There's people out there, it's okay. It's all right if you don't want to talk to people, Then maybe doing the interaction with the contractors and the residents and all that fun stuff that comes with it, maybe that's not for you, and that's all right. Maybe you love talking to people. You don't mind getting creative with a contractor and coming up with new and exciting ways of improving a property. That's great too, right? But you don't want to have a mismatch here. You want to match up your individual talents, your personal goals, your financial goals, and make sure everything's in alignment when you decide to take on the journey to get you to real estate wealth, okay? So now, let's talk about the pros and cons, okay? We'll do a quick rundown here of the major pros and cons of both multifamily and single family, okay? So with single family, they tend to be easier to finance in terms of smaller type of deals, especially if they're owner financed, okay? So meaning that if you are able to, say, get into a single family deal and yourself, maybe a fourplex, you put 3.5% down into the deal, you could do that. That is a way to do it. Finding these small single family deals is certainly possible, and you can get the ball rolling and build out a three other units that are basically paying the mortgage, right? That's really the cap, though. That's really the cap, is that 4-unit mark, because that's residential, all right? 5 units or greater is commercial. That case, it's a little different. Now you have to put 20, 25% down, depending on the asset and the location and a bunch of other things too, right? Single-family homes also have a lower barrier to entry for new investors too, right? So for many, many folks out there, that's a great place for them to start. Is you start at the single family realm. Maybe you're doing duplexes or triplexes or fourplexes, and that's okay too, okay? Typically the purchase prices are lower, and you can analyze one deal and figure out if it's right for you. Then you learn the complexities of analyzing a deal, then maybe analyze a bunch more deals, and then you're applying that knowledge to do like a big apartment deal too, right? So these are all things that sort of get you going into the deal, right? But like I said before, single families don't scale well. It takes a lot more time, it takes many transactions. If you're going to buy, say, I mentioned 50 units earlier. If you're going to do 50 units, it means 50 single family homes. It could be somewhat time consuming. You're looking at a lot of individual assets, a lot of individual homes that fit your criteria, your buy box, right? To get to the deal that you're looking for, as opposed to one 50-unit apartment complex, right? So 2 different things. Not to mention too, if you're buying 50 single family homes, they're going to be spread out usually, right? It's very tough to find if you're going to buy the entire neighborhood. It'd be great if you could, right? Because managing becomes that much easier. You don't see that very often though, right? Usually they're spread out maybe in a single market, or even in a single neighborhood or a certain area of the city. It's great too, right? But the thing is though, is that they will incur more management overhead. It's going to take a little more time to run, okay, as opposed to one concentrated multifamily asset, okay? So with multifamily properties, it does require a larger capital investment up front. So that's the difference, okay? So you have to have more money at stake when you're doing the deal. So that means either you're doing the deal yourself, you're putting up all the money yourself, or you do what's called syndication, where you syndicate the deal. You go and raise money from family and friends. Now, if you're interested in learning how to do that, go to guidetocapital.com. Download the ebook. It's completely free. It'll walk you through like what is involved in doing that. Okay, there's a lot to it. Certainly doable. I've had folks that have been very, very successful doing that, and you can do it too. Okay, you just have to know what you're doing. That's it. So guidetocapital.com. Check it out. Okay. So additionally, with multifamily, you have many tenants to manage in one location, which is okay too, right? You have that, and you also have the ability to scale the asset as well. So the scale, the debt, everything, those things that come with it, sure, there's a great deal of risk, if you will, right? Or perceived risk, but all those things make it worthwhile, in terms of just getting a lot of eyes on the asset. And of course, all the cash flow it throws off. So it's just, like I said, it's two very different ways of making money, two very different ways of getting cash flow, right? So it really, in summary, single family homes make sense for maybe newer investors that want to minimize some risk. They reduce the barriers to entry, right? Where multifamily, these commercial type deals, it's better suited for experienced investors. They can maybe have more access to capital, or maybe they have capital of their own. Maybe they have a higher risk tolerance, right? Or they have a desire to scale into a big rental property much faster, right? But again, it depends on what you're looking for. We have students, and we have a couple of masterminds right now. We have the Multifamily Advantage and the Multifamily Accelerator. There's no reason why anybody can't jump or into the accelerator, learn how to raise money and put deals together and go. They can certainly do that too. It's just a very different way of thinking about how you're going to raise the capital, put the deal together and go. And we show all of our students how to do both these things. If you want to start small on a smaller deal and grow and then end up switching to big multifamily, that's what I did. It works too. Okay. So what it comes down to is, what is better for your situation? So deciding between single family, multifamily investing ultimately comes down to your specific goals and your circumstances. So here's some questions to ask yourself. Like, how much capital do you have to invest right now? Right now, right? How much of the down payment can you afford, can you grab for a big multifamily deal, right? How much money can you raise? And typically what we tell our students is that if you need to raise $1 million, make sure you can get your hands on at least 3, right? At the beginning, when you're trying to basically prime the pump, you're getting your investors lined up. Make sure you can get $3 million of commitment, expecting $2 million to fall off. And you might end up with 1, right? That's how we generally do it. So you want to make sure you have a big pipeline. It takes some work. It does. But it's totally worth it. Other questions here. How comfortable are you at taking on a higher risk for a higher reward? Because multifamily, there's more risk, but the upside is far better. Also, do you prefer active investing versus passive investing, or some sort of hybrid of the two? Where multifamily requires a bit more oversight, like I mentioned before. Certainly you have the lender involved, and you have property managers and asset managers, all these different types of people. You're going to have to keep an eye on it. It's not entirely passive. If you become a syndicator, if you say, I want to raise money from other people and put it into these deals, you can do that. But it's going to require some oversight. So single family requires oversight too, but it's just a very different level of oversight, right? With multifamily, it requires a bit more oversight, and especially if you're going to be syndicating a deal, you definitely need to make sure you have systems and processes in place to make sure that the property stays and where it's supposed to stay in terms of goal, right? Also, what else? Are you looking to build wealth slowly or quickly, right? So if you're looking to scale very, very quickly, multifamily is probably for you, right? And if you're trying to do like larger deals, you can buy a handful of deals and have 500 units fairly quickly, if you could find them, of course, right? Single families, to try to get to 500 units, one deal at a time, takes a little bit longer, right? So it depends on how fast you want to scale. If you don't mind scaling slowly, maybe single family or small multifamily might be a place to start too, okay? Another question to ask yourself, how much experience do you have as a real estate investor? So newer investors may want to start small, and that's cool. That's all right, I think though that making mistakes, there's nothing wrong with learning from mistakes. They just don't have to be yours. So joining a mastermind, understanding how to structure deals, maybe even using creative financing just because of how much the cost of money is today, might be a good way to do it. If you don't know how to do any of these things, sure, you can read books and all that fun stuff. You could absolutely do that. But when you're in a mastermind and you're talking to other people just like you that are on the same journey as you are, and you get to learn from other people and you get to accelerate that learning, that's how you make deals happen. Okay, so take some time to really think through your answers to these questions, right? Try to determine if single family is the right path or multifamily is the right path. And, either way, we have a program that can help you get into either one, right? So we can show you how to become successful depending on whether what journey you want to go to, right? If your capital experience is limited, single family might be the way to go. The small multifamily route might be the way to go. But if you have a means to start bigger, maybe you have access to capital, maybe you have friends and family that have some cash, maybe you ought to consider doing the accelerator. You ought to consider doing something that will get you to wealth much, much faster. So ultimately, like I said, I've already discussed our Advantage program and our accelerator program, right? Like I said before, if you're considering starting in multifamily at all, which I strongly recommend, not just because I love real estate, right? And I'm not trying to just push our courses. Whether or not you do it with us or someone else doesn't matter to me. It's because the value of the dollar continues to get beat up, and you need to be in hard assets. Everybody should be in hard assets of some kind, right? Preferably cash flowing assets. And the way you do that is to get into real estate. And the thing is, though, if you're not sure on how to do that, getting a mentor will accelerate your time and decelerate your mistakes. All right. That's huge right there. The mistakes alone could be very, very costly. So it's, trying to jump into, especially multifamily without the guidance can be extremely costly. All right. You have these legal, financial, operational considerations that are way, way, way different than single family homes. They just are. Okay. Even experienced single family investors are not prepared to take on the large apartment complexes without the additional training and education. And that's what we do, right? So I always recommend to anyone I talk to that doesn't really understand how to structure these types of deals, get a mentor. A mentor helps you avoid the costly pitfalls by sharing proven systems and the know-how from decades, literally decades and millions of dollars of experience. Okay, so when you learn from someone who's already done it, it really reduces the mistakes and gets you on a fast path to where you want to go. Okay, so, and like I said, our Advantage program, our Accelerator program, either one of these two gets you access to the community, gets you a 50-week mastermind, step-by-step training. We do all kinds of other fun things in our programs to keep you engaged and really help you become the best real estate entrepreneur that I know that you can be. Okay, so like I said, to learn more about the Advantage program, multifamilyadvantage.com. If you want to know about Multifamily Accelerator, it's just multifamilyaccelerator.com. All right, so go ahead and check that out. All right, so like I said before, there's certainly differences between multifamily and single family. I like both. It just depends on what your personal goals are. All right. It doesn't matter up to me. It matters up to you. Like, what do you want to see in your future? So I suggest, listen, go back. If you're watching this right now, this will be posted up on YouTube probably the next day or so. You can go back and grab all those questions and really ask yourself, what do you want to see? What sort of path do you envision for yourself or your family? What sort of life do you envision yourself in the future that'll give you the type of freedom, the time freedom that you're looking for? Okay, so let me know if you have any questions. Always happy to help, okay? And like I said, reach out if you have any questions. If this thing's on YouTube, go ahead and drop a comment. We'll have someone reach out to you, okay? Thanks again for your time today. Greatly appreciate it. I'll see you again next week. Take care.